Hello everybody, welcome to our webcast. My name is Mika Heikkilä, our CFO, and today with me is Iikka Kuosa. Hanna Porkka couldn't come today, and Iikka will substitute her today. So we will start with the Q3 results.
Thank you, Mika. I will start with our outlook and few highlights of our business. First, our operating profit for the period from January to September was 24.1 million compared to 20.6 million last year. It was driven by growth in total income by 12.5%, which was strongly driven by 16.1% increase in our net interest income. And we do state today that outlook has improved. We expect that our operating profit for the whole year to significantly exceed the previous year's level, which was 24.8. Previously, we stated that the operating profit for the whole year will exceed the previous year level. On other key numbers of the period, our lending increased to 6.6 billion euros, being in the comparable period in last year 5.9 billion. Our comparable assets under management ended up to 7.0 billion, that being 7.1 billion in last year. Our capital adequacy ratio rose to 16.0%, being last year 14.9. On the rating perspective, we are building on BBB and stable outlook by S&P Global. Some comments on the first 9 months of this year. Our business developed positively. That's a fact. And especially in the third quarter, the net interest income grew due to the higher interest rate level. At the end of the period, we had 578,000 active customers, which was 60,000 active customers more than at the end of September 2021. And then we had an unfortunate operative risk event during the period. We had a malfunction in our netbank ID service, and it was unfortunately exploited by a few individuals. It had an impact of few hundred our customers, and once we find out and detected the issue, we corrected it immediately. We want to say we are very sorry of what did happen, and want to say that we will compensate all the financial damages caused by the malfunction. We want to also say that the security of our service is very important for us, and we have made multiple measures to strengthen the security of the services and prevent all criminal activity. As an additional point, our board of directors has appointed new CEO, Riikka Tolonen, and she will take up her post in April 2023. On the business segments, some highlights. On the banking, the total sum of the purchases made by our Visa card was a record level. It did increase by 19.2% from the previous year. On the other hand, our housing loan volume grew by 10.6% over the 12-month review period, and it was 4.7 times higher than the market growth. And on the banking segment, the operating profit was 37.1 million compared to 28.7 in the previous year. On the wealth management side, the S-Bank funds unit holders numbers increased to 360,000 from 325,000 a year earlier. The net subscriptions of the funds was 106.8 million compared to 238.8 million in the previous years. But we also want to highlight that the net subscriptions of the S-Bank funds were notably higher than the media for the business in case. And on the wealth management side, the operating profit was 2.8 million compared to 5.6 million in the previous year. Some key information of the September end figures. We are of course building on our unique customer base of 3.2 million, and our assets was 8.9 million, and as already stated, the operating profit was 24.1 million. And the unique channels, customer service channels, is of course the key strength of our business. We have cash withdrawals and deposits possibilities at around 1,000 checkouts on S-Group outlets, and we do have a service points at 80 places in S-Group outlets. We see that we are well positioned to sustain above market growth, and building that on clearly differentiated customer benefits in a homogeneous industry. We do have free daily banking services, unique access to S-Group loyalty program. S-Mobile is a key service, something that our customer 2.0 million customers did use in September. We have a local presence across Finland, and we have a leading brand in fairness and sustainability. And the other factors which we are building our strategy is large customer base, 3.2 million, and scalable data-driven digital sales and marketing. On the wealth management, the highly competitive offering, especially on the alternative and ESG, is a key assets. And if there's a large customer base, an additional factor is a focused business model and product portfolio. For the end, on my behalf, financial goals are the same as previously. We target for over 10% annual income growth in prevailing market conditions, for cost income ratio below 60, return on equity above 8%, with the total capital ratio being over 13.5. There is no set dividend policy. Our company key is to ensure capital adequacy and growth. And long-term target is 1 million active customers. And we do see that there is a strong growth potential of the company building on our existing 3.2 million customer base. And activating that large customer base is a key thing for the growth. And it's enabled by the digital services, and there is the key thing is the S-Mobile, which was, as I said, used by 2.0 million our customers in September. Then we jump for the finance, and Mika, please continue.
Okay, thank you. So some highlights first from our key figures. I would start from our strong deposit funding base. You can see that the deposit base is bigger than the loan book, and the so-called loan to deposit ratio is around 84%. Now when the interest rates are increasing, we are in a good position, while the interest expenses are increasing gradually due to our deposits margins. Secondly, we can see that our cost to income ratio, it's higher than last year. Especially this year, the regulatory fees are affecting to that ratio. Both financial stability and deposit guarantee contributions are affecting to that ratio. But we will expect that the ratio will improve in the last quarter. Also, the return on equity is improving gradually. Then on the left-hand side, our total income, the growth of total income has accelerated, and we are good in line with our long-term targets at this stage. And also it's resonating quite nicely to the operating profit. You can see that the operating profit of first 9 months, it's almost at the same level as the whole last year level. Also, the lower net credit losses has affected positively to the result. We have had a long-term lending growth. I can say that both in household customers and also corporate customers, the growth has been very nice, and totally it's 12.4%. Of course, when there are lots of uncertainty in the environment and in the market and high inflation, we will expect that the growth figures will be slower in the near future. And the same development also in the total deposits, especially in the household customers. There has been almost 10% growth in last 2 months period. Also in the longer run, if you go back to 3 years, the annual growth has been around the same as in last 12 months. Asset under management, we can see that the development year on year is around the same level. It's only minus 1.2% in 12 months period. But of course, from beginning of year to the end of September, there has been a decrease by 8.4%. There has been a hard market condition, and for example, the equities has declined over 20% this year, and also the rising interest rates has affected to the many assets valuation like bond investments. So it's affecting, of course, to the whole amount of asset under management. Our net subscriptions are still positive this year. Then we come to our credit quality. We can see that in repayment holidays and payment schedules, it's very solid, stable development. We are in the levels which we had before pandemic, and there are also slight decrease at the end of September compared to the beginning of year in both in shares and also in euros. Then, as I said, that the net credit losses has affected positively to our result. We can see that the cumulative net credit losses were 6.6 million in first 9 months compared to 12.7 million last year. So it's very stable development every quarter. You can see that the level is around the same in a longer period. Also, the stage 2 and stage 3 ELC provisions are almost the same level, and totally the ELC provision was 20.2 million at the end of September. In capital position, equity ratio has come a little bit down. It's due to the decrease in fair value reserve. So you can see that the equity is at the same level as it was at the end of last year. And at the same time, of course, when the assets are increasing, so it's affecting to the ratio. And then our capital adequacy ratio are quite stable. They are almost at the same level as they were last year. Both total adequacy ratio and CET1 ratio. In balance sheet and funding, you can see on the right-hand side that liabilities and equity totally 8.9 billion. Almost 90% of that is coming from household and the corporate deposits. Only 3.7% are coming from external other funding like debentures and senior bonds. On the left-hand side, you can see that in assets, over 60% are coming from household loans and only 12.5% from corporate and housing company loans. As we already earlier in the August informed, so we issued a 50 million bond issue in June, and that was with that we could increase our buffers in MREL requirements. Then with own funds capital requirements, on the left-hand side, you can see that the total risk exposure or risk-weighted assets, they are almost at the same level as they were at the end of last year. On the other hand, our lending has increased, but on the opposite side, we have reduced our risk in our treasury investments. So by that we have kept the level almost at the same size. And as I mentioned, the MREL requirements, we are well above the regulatory requirements, and the ratio was 22.5% at the end of September. Then lastly, in our liquidity, our position is strong, and the total liquidity portfolio was 1.7 billion at the end of September, at the same level as it was at the end of last year. Inside liquidity portfolio, the share of cash in central bank has increased from 1 billion to 1.2 billion at this time, and we can summarize that all key ratios are at a good level, and for example, LCR was 160% at the end of September. So this was the last page, and I think that we didn't have any questions there. So we thank you.
Thank you, everybody.